What will 2024 have in store for Bitcoin? Will the 4-year cycle continue? Can we see a brand new all-time high? And how are the macro charts shaping up? Let's go ahead and jump into the video. Okay, MegaWhale team, welcome back to the channel and happy new year. Bitcoin has seen a phenomenal 2023 and we are expecting a equally as strong 2024. In today's video, we're going to be discussing, based on historical data, what we would anticipate for Bitcoin in 2024, how the macro charts are shaping up from a structural and technical perspective, and of course, the yearly candle close, what it means, and the short-term price action. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic data. If you are interested in joining our VIP channel, we do have a sale at the moment, the end of year sale. We only have 12 hours remaining on the sale, so go ahead and contact me. You can find out more information from the membership details over here and the entire trading track record via these two links. To show you the VIP really quickly, we post trading setups with the exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and everything you need to follow these trading setups effectively. We also do have a group chat. You'll get access to our general chat, our trading chart and education chat, our news chat, our help chat, our daily video chat, and of course, our trade setup chat. If you're interested in access to all of that, you know how to contact me. Go ahead and check it out before the sale expires. Let's dive into the video, guys, starting on that market data. So, a pretty big moment for Bitcoin is about to unfold, and that is going to be that yearly candle close, and actually closes out in 42 seconds. So just in time for the video, we're going to be discussing what that means in context of the technical levels and structural levels in the video today. But before we do, the data. So 24-hour volume is up 16.31%, sitting at a total of 92 billion. Liquidations have jumped up a significant amount to 200 million. This is sitting at 167% up since the last 24-hour period. Looking at the volatility index, still really not all that much change on the short term. We do have, on the 60-day period, more or less the volatility index moving sideways, and on the 30-day period, we can see again the volatility index is more or less moving sideways, as the price action has been now compressing for around about 30 days in this relatively tight chop zone with that 44.2k level of resistance. We'll come back and discuss this in today's video. Moving over to those liquidation data, we can see 116 million came from our long positions and our short positions came in at 88 million. Moving over to the DXY, the DXY is currently sitting at a decent level of support. This is going to be the 101 level of support. As we can see, we have retested this area numerous times over the last 2 years, having broken below it only once. That one breakdown resulted in a strong correction down to the 99 level, that sub 100 level, retesting our highs from all the way back in March 2022. Currently, we are in a strong downtrend for the DXY, as represented by this diagonal solid trend line. We can see that this downward trending resistance represented by this diagonal trend line is acting as not only a resistance, but a trigger point for the trend to flip, meaning while we remain underneath this downtrending diagonal trend line, the current trend for the DXY is still moving downwards. However, we are retesting a small area of support. A loss of this support level will result in a correction to that 99, potentially that 100 level. If we do break above this downtrending resistance, we will likely see the trend flip And we could see the DXY gain some strength to push up to the next level of resistance at 102 to 103. Keep your eyes on that, guys. Again, the DXY goes downwards. This is going to be exceptionally bullish for Bitcoin, exceptionally bullish for the stock market. If we see the DXY reverse over here, gain some strength and break out of this downtrend, we could see some pullbacks across the board for our traditional assets and, of course, our asset market for cryptocurrency. Moving over to the S&P 500, we can see we actually got that weekly candle close just over that prior high point, sitting around 4,800 all the way back in January 2022. This is officially the highest candle close we have seen for the S&P 500, creating a brand new all-time high, and more importantly, flipping this level of resistance into a level of support. That means two things. Number one, we would expect the S&P 500 to continue toward the upside, provided it remains above this level of horizontal support. It is now actually a support level. Let's go ahead and fill it out. However, if we fail to maintain above this level and break below the 4,766 level, this local low range of the resistance, that is going to be a trend flip, a bearish trigger, and will result in a correction for the S&P to potentially retest 4,600. So we're looking for that gap over here to close and fill if the S&P engulfs this prior candle. However, until then, support is support until it's not, and we would expect the S&P 500 to continue upwards, provided we do not break down below this level of support. Exactly the same thing goes for the Dow Jones over here, guys. We do see we have created a decent amount of ground between where we are now and, of course, that major bearish trigger. A loss of this local low will result in a correction toward the downside, potentially retesting 35,550. And again, while we remain above this level of support, we do expect the price action to continue on the macro upwards. Even if we see a correction into this range, we would expect a bounce from there. So overall, traditional assets are looking very strong. With that being said, guys, we have so much to talk about today, guys. We're going to be talking about the higher time frame, the daily charts. We'll be discussing the yearly candle close, what it means for Bitcoin. Was it a bullish close? We'll also be discussing the 4-year cycle. We'll be discussing, more importantly, what we expect Bitcoin to do and how we expect Bitcoin to perform in 2024. Will we create a new all-time high? Could we see the 4-year cycle end? And how is everything tracking along for Bitcoin to enter a new bull run? And we'll be discussing the short-term charts, going over the current price action and next likely short-term moves. Before we do, a quick word from Bitget and BingX, and we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right-hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, we're back into a Bitcoin. Let's go ahead and discuss the chart, starting on our macro charts. As you know, the yearly candle just closed as we officially enter 2024. What a year it has been for Bitcoin, with a phenomenal move toward the upside, actually going all the way from about 16.5k to 42,000 in 1 year. So a fantastic move for Bitcoin, and we're not even in a bull run yet, which is mind-blowing. So how did the yearly candle close? It closed as expected. If we take a look at our prior yearly candle closes, particularly the phase of which we are in within the 4-year cycle, which is going to be this accumulation phase. So we're looking at this candle here, we're looking at this candle here, and now we are looking at this candle here. These are going to be our accumulation phase closes. What we have noticed is within this phase, we do not see the close of the yearly candle above that dotted trend line. You can see a dotted trend line over here. You can see it once more over here. We do not see the yearly candle close above the dotted trend line. In this instance, the yearly candle close occurred at around 42,200-ish, which was not only underneath the dotted trend line, but more importantly, it was also actually underneath the Ichimoku cloud baseline on the monthly chart. We'll come back and discuss what that means in just a moment. So the yearly candle close was as expected. It wasn't exceptionally bullish. It definitely wasn't bearish. It was exactly as expected according to the 4-year cycle. So moving forward from there, what are the charts looking like and what would we expect to happen in 2024? So a quick analysis of two things: our date range trend for the 4-year cycle and prior historical price action within the current phase of the 4-year cycle, and we'll extrapolate that forward. So what we can see is the circle, or these squares, these white squares, okay? These represent the 1-year period within the 4-year cycle between the end of the accumulation phase, okay, and the entrance into the bull run phase of the 4-year cycle. So it actually constitutes these ranges. So we take 2020 to 2021, it is this phase over here. If we take all the way back over here to the end of, or should I say the start of 2016 to the end of 2016, this range over here. And if we take all the way over here, which is going to be the start of 2024 into the end of 2024, which is going to be this range here. We're looking at these particular ranges of price action, which actually shows us the end of the accumulation phase, this gray phase, and the start of the bull run phase. So we have a little bit of that accumulation phase and the bull run phase, a little bit of that accumulation phase and the bull run phase, and again, a little bit of that accumulation phase and that bull run phase. So that is what these white boxes represent on this chart over here, which of course is our weekly chart. So if we take a look at what has happened historically within this range from a price perspective, we have seen in both instances the price action push upwards to retest the all-time high, which is represented as this very faint dotted trend line. I hope you guys can see it. Actually, you know what? I might change it to red so you can see it a little easier. I hope that's a little bit easier to see. Let's make it a little bit larger. The dotted trend line, which is the all-time high. We can see just as that yearly candle closed, we retested it, and in 2020, we actually broke just above it as that yearly candle close. So what does that tell us for 2024? Historically, in both instances, we have seen this particular phase of the 4-year cycle result in a move to retest the all-time high from the prior cycle. So according to historical data, if the pattern repeats, we would likely see Bitcoin at least retest, maybe not break through, but at least retest the all-time high from the prior cycle, which is sitting at a price point of around 69,000. So we would expect 69,000 by the end of the year by 2025. Okay, moving forward from there, guys. That doesn't necessarily mean Bitcoin is going to permanently go up and go up straight away. As we're going to see, we have seen numerous dips occur within that phase, or that 1-year phase, of course, with the COVID crash over here. And if we do take a look at the 4-year cycle, we can see we do actually have about 3 months remaining, or should I say 2 or 3 months remaining, until we technically enter that bull run territory. So to summarize it really quickly, according to historical price action, we're entering a year of expansion. We're entering a year of historical growth. This growth generally takes us up to at least retest the prior all-time high for Bitcoin, provided the 4-year cycle remains intact and continues. So when will we see the proper all-time high for Bitcoin? When will we see the next bull run officially end? If we do a date range analysis of the dates between tops and bottoms for Bitcoin, we can see that on average, we have from bottoms, okay, to tops, we have a date of 1,064 days. If we extrapolate that forward, we take from bottoms to tops, we have a date of 1,064 days, the exact same amount. If we take a date from all-time highs to bottoms, we have a date range of 364 days. And from tops to bottoms, we have a date range of 364 days. Assuming that pattern continues, we can extrapolate 1,064 days forward from the all-time low. That takes us to a top point, which marks the date of the 6th of October 2025. So according to the 4-year cycle, we would expect the all-time high for Bitcoin to be put in on the 6th of October 2025. Let's go ahead and move over to our indicators. So as we know, we've been discussing two major significant indicators that were actually about to print during this yearly candle and monthly candle close. These were the Gaussian, not the Gaussian channel, the Bollinger Band, upper band, and of course the baseline of the Ichimoku cloud. We've had one out of the two print. Number one, we've officially had a monthly candle close above the Bollinger Band, upper band, which in history has marked not only the first step in starting the next bull run, but has solidified a strong base of support, which represented as the midline of the Bollinger Bands. What we have seen in the past, every time we close a monthly candle above the Bollinger Band, upper band, after being in a bear market, we remain above the midline of the Bollinger Bands until we break below it and capitulate to a new low. We've seen that play out once over here. If we go forward, we break above the Bollinger Band, upper band, we continue to the all-time high, we break below the midline, we capitulate to an all-time low. In this instance, we have just had that breakout. Therefore, if everything goes as expected, we shall remain above the midline of the Bollinger Band until post October 2025, where then we would break below it and capitulate to an all-time low. So there's the first amazingly bullish thing that has happened on the monthly chart. And number two was the baseline of the Ichimoku cloud. We were looking for a monthly close over it. In fact, we did not manage to get the monthly candle close above the baseline, which, as you would know now, is one of the most important indicators we need to see a monthly close above to initiate that bull run. Now, I would like to say it is a good thing we did not see the monthly candle close above the baseline of the Ichimoku cloud, as if we did see the monthly close above the baseline, it could have potentially thrown a spanner in the works in regards to the start of the next bull run. If we take a look at historical data, we generally see the monthly candle close above the baseline at the exact date of the halving. This is going to be in April 2024. What does this mean? It means two things. Number one, we see an early break above the baseline of the Ichimoku cloud, which could develop into an early break of the dotted trend line, which would result in an early start to the bull run. Or number two, this level will remain as a resistance until April 2024. Meaning we could see 2 months of downward price action leading into that. Nevertheless, guys, the most important level for Bitcoin to still break above, to continue upwards on the macro scale, is going to be that dotted trend line. That 44K level is without a doubt 10 times more significant than any other level on this chart as of right now in terms of macro continuations upwards, as it is represented as a yearly level of structural resistance. And if we break above that resistance turns to support, we create a strong base of support, and we continue upwards on the macro scale. Historically, this area has acted as a resistance in the past, but we have not quite retested that level yet to validate that as resistance. What we have seen is every time we close a monthly candle above this level, that is when we officially enter the volatile stage of the bull run, and the prices significantly surge for months to come until the end of the 4-year cycle bull run phase. So definitely keep your eyes out for that one, guys. Let's go ahead and finish up now on the short-term price action. So there is two things we are really looking for here on the short term, and number one is going to be a shift in momentum, and number two is going to be a shift in overall volume. So taking a look at the current price action, we can see we have now been consolidating for around about 28 days or 27 days, basically a whole month, right? Basically the entirety of December, we have now been consolidating within this parallel range. We've had a whole bunch of chop, we've had a whole bunch of smaller time frame patterns develop, and all of it has resulted in, again, a large amount of chop, a large amount of liquidity grabs, and more or less nothing. If we look at the price action, we have done more or less nothing for the last 20 days. We've been pushing almost sideways. So now we are looking at this and asking ourselves, well, what could occur on the charts to facilitate a break out of this range toward the upside or the downside? So to understand that, we need to take a look at, of course, these changes in real-time buying volume, or should I say, strength between buyers and sellers. If we see significant shifts in buying or selling, that could potentially indicate the range will likely break upwards or downwards. How do we assess that? Well, we take a look at our stuff like momentum and volume and volatility. So let's take a look at the current price action. We can see from a structural perspective, we have a very clear horizontal range. This horizontal range is reflected by our upper level of resistance, our range high trigger, which is sitting at 44.3K, and our range low support, which is sitting at 40.5K. The 40.5K level is almost converging with our major diagonal uptrending support line, reflected by this black diagonal trend line, which is this trend line over here. So perfect. How are we looking for a continuation upwards? We do need to see two things. Number one, we need to see momentum flip positive, meaning we need to see the price or the RSI break above this diagonal trend line. If we see the RSI break above this level, that would indicate during this entire period of consolidation, we have now officially seen the momentum flip positive in a significant way that we have not seen occur within this entire 27-day period of consolidation, which would indicate the bulls are gaining significant strength. That is likely to push the price upwards to at least retest the upper range of this resistance at 44K. And as you know, if we retest this resistance with a uptrending support line at the bottom, we would likely continue upwards as it is reflective of bullish consolidation. We do have that. If we look at this dotted trend line, we have a uptrending support. We have higher lows developing within this sideways consolidation, which could lead us to believe we have an ascending triangle structure, guys. We have an ascending triangle structure and we have a bullish momentum flip. We are very likely to break through that resistance when we retest it again, pushing us up to 46 to 48K. Number two, the second thing we are looking for is going to be a nice strong shift in the CVD. Specifically, we are looking for a break above as a minimum. As a minimum level is going to be this dashed trend line. If CVD is able to get above this level with the RSI break, that is going to be a strong sign that the price action will likely retest these highs and retest this horizontal neckline of resistance. Now, if the opposite occurs, if the RSI breaks downwards, that will confirm the fact that we're going to see a correction towards the uptrending support line. Now, even if we see a correction toward the uptrending support line, we are still in a major uptrend as reflected by this diagonal trend line. We're not going to get into this too much more other than to say that today, as a lot needs to happen for the price action to correct that low. So we'll come back and discuss what we expect if that actually happens, when it does, if it happens. So with that being said, guys, we'll go ahead and summarize one more thing. And that is the macro charts are still very strong. More importantly, with December ending and moving into 2024, which is January, we do have a whole bunch of ETF news coming this month. So as we know, news has a massive impact on public perception and individual buyers and sellers' actions. and those actions drive the price. So we see any significant alterations in the expectation in regards to what people expect and what news we actually get, we could see a significant shift in price action that would almost be unexpected. So if we do see some volatility and unexplained, unexpected price action, we can nail that down to the fact that we have high impact news coming, and when we move into high impact news, you should be more cautious. Thanks for watching. Have a fantastic rest of the day. Happy New Year, and I'll catch you everyone tomorrow. Cheers.